What's up guys, welcome back to my YouTube channel. This is jusyfx once again. Today is 24th of January 2025 and I made over $2,000 trading EUR GBP, that's euro pound pair, today using the simple ICT concept. It's a very simple concept, liquidity based time and price concept. So I'm going to be breaking it down for you guys, putting you through the thought process and how I was able to catch beautiful $2,000 trade today. So if you are new to this channel, you're going to be seeing me break down more of EUR GBP. That's the only pair that I trade, at least for now. So sit back, relax, and let's get right into the video. So the trade recap of the trade that I took today is going to be very basic. Don't expect something complex because I keep it really simple, not just on charts, but my concept is actually really simple. Remember that ICT gives us lots of arsenal of tools and you just have to pick the one that works for you. Just streamline it to something very simple and you are good to go. Okay, you don't need to trade all the things in the ICT concept. You don't need to know everything, as a matter of fact. So I'm going to show you how I approach my markets, or how I approach the markets and get beautiful setups just like the one I took today. Okay, so I'm going to clean up the lipstick on the chart right now and start all over from the beginning. Okay, so if you understand ICT, basically it's simply around liquidity, time and price. Okay, if you identify where liquidity is resting or where price is going to be drawn to, you have solved like 50% of the problem in your strategy. Okay, the first thing you need to identify is where is price expanding to, and all you have to do is just follow price to that direction. It's as simple as that. Okay, so I'm going to take you to the daily time frame right now. This is EUR GBP, by the way, for those that do not know. Okay, so starting from the daily time frame, you need to ask yourself this question. Number one, where do you think price is going to expand to? Okay, where do you think price is expanding to? Today, are we expanding higher or we're expanding lower? These two questions will help you determine where you're facing or where you are channeling your energy, whether you're buying or you're selling for the day. So once you identify on the daily time frame that price is coming lower, all you have to do is just wait for the lower time frame to follow price towards the direction. And how do you identify direction? You identify direction just by identifying where liquidity has been taken and where liquidity is going to be taken. Okay, so what I mean is liquidity has been taken from high, liquidity is coming, price is coming lower rather to grab liquidity. Okay, or price is coming to fulfill some objective down below. Now in this case, just not to waste too much time, in this case price took out previous highs. Okay, this is Thursday, that's 23rd. Okay, yeah, price took the high, and that's like the first thing I need to know. Price just traded above a previous high. You need to understand about ICT that it's just around liquidity concept, very simple, and you all know what liquidity is. If you don't know, I would try to make a dedicated video explaining liquidity, but basically we have very simple liquidity concept, which is buy side liquidity and sell side liquidity. Okay, so if you're looking at selling, for example, you're expecting price to raid previous highs to bring price lower. If you're looking at buying, you're expecting price to raid previous lows to send price higher. Okay, so these two simple concepts will help you determine price delivery and where price is headed. Okay, so in this particular case, on the daily time frame, price traded above the daily for Thursday, which is Thursday 23rd. Today's 24th. Thursday's high, and ideally all I want to see is price come all the way down. You can see the way price traded above it and dropped all the way down. Okay, all I want to do is just to go to the lower time frame and look for an entry sending price lower. Okay, so if I go to the 15 minutes time frame, I won't be cutting price, I won't be doing bar replay and all that. I'm just going to show you real-time price action. Okay, if I go to this is 1 hour time frame right now. Now you can see that this is Thursday's high. Price traded right above Thursday's high. Now I said earlier that if you're looking for sales, you're looking to sell right above the previous high. That's after price have traded above the previous high, raided liquidity above some highs to send price lower. Okay, and if you're looking at buying, you're looking at price trading below previous lows to send price what higher. Okay, it's as simple as that. It's most, or is even more interesting when you have price trading above previous daily highs or previous daily lows. Okay, in this case price traded above the previous daily high, and I told you guys about the application of timing to your trading. Okay, the manipulation mostly occur around a particular time. I won't be able to talk about that right now. I'll make another dedicated video for that. Okay, so manipulations occur around a particular time. For instance, London sets the high of London at a particular time, or the low of London at a particular time. Now around these times are when you are expecting price manipulation and you are trading after the manipulation. It's as simple as that, guys. Now we have identified that price is coming all the way down because price traded above the daily time frame. Now if you check the time price did that manipulation, it's around the ICT Q zone, London ICT Q zone, which is around 7 a.m. till 10 a.m. London time. Okay, now I waited for price to trade above this Thursday's high, and I was able to catch very beautiful setup and entry right from there. Now after price traded above this high, I jumped down to 5 minutes time frame. That's my entry. And what is my entry? It's actually really simple, guys. Really simple. Okay, after price traded above the high, I waited for price to invert a fair value gap. Okay, so we have inverted fair value gap. That's the first IGS showing us price is ready to go down. Okay, that's an inverted fair value gap. Let's see if we can label that. Inverted FVG. Okay, good. That's an inverted fair value gap, which means price is ready to come down. Now the next thing, which is my main entry, is after price creates change in state of delivery. Change in state of delivery. Now change in state of delivery is simply price showing you its intention. Price is ready to come all the way down. Now how do you identify change in state of delivery? I'll make another video for that. We'll have lots of videos to make, guys. So if you have not subscribed already, pause the video right now and hit the subscribe button. Do not also forget to like this video, share, drop a comment, and turn the notification so you don't miss any of our content, guys. Okay, let's get right back into it. So after price traded above Thursday's high, I was waiting for price to see what price would do. Remember, all these are still happening within the ICTQ zone. Okay, price traded above, inverted a fair value gap, changed delivery, which means all of these up close candles, price just traded right below it. Now the idea is, if this is supposed to be a bullish move to continue price higher, this fair value gap first of all is supposed to hold to send price higher, or probably this sell candle should hold price to move price higher. But no, price traded below it, closing with a body right below it. Immediately I saw that, I was ready to strike. I used a 6 pip stop loss and I placed my target rather, at this low. That's my sell side liquidity. Okay, that's my first entry, and the next entry came after I saw on 5 minutes just internally that we had a minor liquidity rate above that high. And after that happened, I was expecting the same rule, which is change in state of delivery, which is here. That was supposed to be my second entry, but price did not tag me in because of spread. Okay. Okay, I waited patiently and I jumped right back into 15 minutes. When I got to 15 minutes, I saw that okay, we could still have an opportunity to take price lower, and I saw all of these up close candles and price traded right below it. That became my second entry. The moment price came back into this place, used another 6 pip stop loss to target the same level for another 2R. Okay, so these were my actual entries for the trade that gave me over $2,000 today. Okay, I had another one, but I did not take it. It's just a forward tested level, which is these points right here. After price created this, okay, yeah, just right there. okay, that's for another 2 hour, but I did not place that. Okay, I had one missed trade due to spread. Just right here, I was able to catch it again at the 15 minutes entry right here. Okay, and then I targeted the low. So it's a very simple concept, guys. Let's just take a recap. I was expecting price to come all the way. Let's go back to the daily time frame and see if we can, just run through it quickly. I was expecting price to trade lower simply because price traded above Thursday's high, sending price lower. Now the manipulation occurred around a particular time. I waited for price to run the manipulation. Remember, this is Thursday, this is Friday's trading. I waited for time and price did its thing. I waited until price traded above this high, which was Thursday's high. After price traded above the high, I jumped to 5 minutes, and then I waited for a change in state of delivery, and then confirming after we had this inverted fair value gap. That was the first entry, and then the second entry just by following order flow on 15 minutes. So it's a very simple concept that if you give time to studying it, will really be profitable for you. So I hope this was helpful, and I hope you gain value for your time. Okay, if this was helpful, remember to subscribe. Do not forget to subscribe. It's very important, guys, and see you guys in the next one. Peace out.